Adam Jonas from Morgan Stanley just held a meeting with other Tesla institutional analysts to get their outlook on the stock. The report this time around is what he says easily the most bearish of these meetings he's ever had. Most felt that the stock would underperform over 12 months. Morgan Stanley themselves still remain overweight on the stock with a $325 price target and 80% upside from today's stock price. The topics we'll review today are the AI narrative, how Tesla fares against the Mag 6, expected revenue growth, and a consumer survey of perception of Tesla and Elon. So today we have Brian White joining us. He has a YouTube channel called FutureAza. Check him out. He's had a whole new rebrand, so all their spanking brand new. Welcome, Brian.
Hey, Herbert, it's great to be here. This is a very hot topic. There's a lot of opinions going around, and I'm excited to see how this one shakes out.
I don't know if you caught it. I said spanking brand new. I meant to say sparkling brand new. So,
or brand spanking new. I don't know.
Oh, okay,
either way works for me.
Okay, gotcha. So let's take a look at Morgan Stanley's Adam Jonas's note. So Morgan Stanley is one of the biggest bulls for Tesla. His latest note that he dropped a couple months ago really made the stock jump because he talked about Tesla's AI potential. Now let's take a look at when he has these regular lunches with other institutional investors, what they're thinking. What this says here is mixed reactions despite doubts and sales of growth in AI. There's optimism remains with over 80% upside potential. That's with Morgan Stanley, not the others. So let's take a look at it. This is a bull bear lunch that he has, and he did the perception survey. So this is what he says. Just back from easily the most bearish of our Tesla bull bear lunches, but for admittedly understandable reasons. Some doubted if sales grow at all this year. We'll talk about that later in the segment. Most see consensus falling and AI off the table for now. They don't see Tesla as an AI company. Despite the overall tone at the lunch, Morgan Stanley still remains overweight, with Tesla offering over 80% upside from current levels. They see the stock jumping from where it is now to 325, which we believe is compelling in proportion to the investment level within our U.S. auto coverage. And then they are going to talk about the perception survey. Let me just explain just one more thing. I think this is really important here. So when they asked this group of institutional investors, actually, it just says here from our read of the room. Okay, it wasn't a formal survey. It seemed that everyone felt the stock would underperform over 6 months, and almost everyone felt the stock would underperform over 12 months. So what's your reaction to that?
Well, there's a couple things there. The first is they don't see the catalysts. They don't see what's coming next. They often don't. I'd love to be a fly on the wall at one of these lunches, but the conversation would be interesting, but I don't think it would be definitive. These people are not good predictors of the future. If funds were able to predict the future, they would always beat the market, and they rarely beat the market. So the thing with the catalysts is they don't see any appreciable improvements in beta over the next 12 months. Maybe that's the case. But even just changing the pricing structure on it could change the revenue. They don't see that FSD and enhanced autopilot are starting to be rolled out in China and Europe, the two of the three biggest markets Tesla has. That can generate substantial revenue. Maybe that's something they're overlooking. They're just looking at things like new factories and new products. And I think that's a bit short-sighted, and I don't know why they would feel that way. But the fact that this is the most bearish they've ever had, and they still see 80% upside, is awfully encouraging to me.
Yeah, very good point, actually. So that made me think that it's that there's certain institutional investors who do deep dives in Tesla. So people like Morgan Stanley, Dan Ives, Mizuho, which is like the number one stock analyst picker, who's number one right now. So all these guys do deep dives in Tesla, and so they do see, and that's why you still see overweight ratings. But the rest of these institutional investors, the lunches that he has, they're reacting to just the general knowledge, right? Is Tesla an AI company? What's happening to their car business? Just general sentiment. They follow whatever the sentiment is, and then they kind of just report that. So,
and they're looking at stock price, not execution.
Yeah.
To them, they don't care if a company executes as long as the stock performs. And you and I look at the 5-year, the 10-year, the 20-year horizon, who is best positioned to capitalize on the changes that are definitely coming, that we can see right there on the horizon. And for my money, I mean, you know where I'm at.
Yeah, you're absolutely correct. There's so many analysts who just look at the stock price, and if the stock is down, the business is bad. If the stock is up, business is good, and that's just not the case. The two are separated completely. So this is the topic, the next topic that they did discuss that I'm very interested in, which is the AI narrative versus the auto narrative. Elon Musk is seen as sidelining Tesla from the AI theme for 2024. What does that mean? It means that they don't think that Elon is trying to make Tesla an AI company, allowing investors to focus on the deteriorating EV demand narrative. So they think that Elon's not doing a good enough job communicating that Tesla is an AI company. At the same time, an improving EV narrative is seen as a prerequisite for investors to underwrite the AI story. So they still need to see EV improve before they will assign Tesla an AI valuation. What's your thoughts on that?
I don't see how they're able to make an assessment like that. The problem with AI is it's so new that it's hard to wrap your head around. And even if these people are relying on internal experts who really get AI, I feel like they don't get it. It's like having a grandson who is good at the TikTok. I don't think they quite see what's coming. Is Tesla part of the AI story in 2024? In a revenue sense, maybe not. And that's really all they care about. But in the much more meaningful execution sense, clearly they are, if not the forefront, they're near it. They're right at the bleeding edge of applied AI. Version 12 is applied AI in the broadest sense possible. We will soon have millions of vehicles operating using this very new technology of neural nets, end-to-end coding. It's going to be a pretty big game changer. So I guess I would have to disagree with that assessment. I would also say that the Dojo chip, I've seen a lot of grumblings lately. Dojo is delayed. It's a disaster. It's a mess. And I had a chance at CES to talk with a chip designer from IBM. And he was gracious enough to not tell me anything that IBM is doing. But I said, hey, do you know anything about Dojo? And he said, I do. It was my responsibility to tear into everything we could possibly find about that chip to determine if there was any IP infringement. There wasn't. But also, just because of my profession, it was a very interesting topic for me, and I enjoyed the thought experiment. And I said, is it delayed? Why is it taking so long? He said, well, it could be delayed, but it doesn't appear to be. This is how long it takes from unveiling it, from having a chip to commercializing a chip, to mass producing it. He said the first problem is you've got to make sure the hardware actually works. There can be refinements to the design, to the manufacture. And then you need to make sure the software works on it. And for Dojo, the big problem is going to be getting the waste rate, the scrap rate, down to an acceptable level, because it is such a complicated chip that there's room for it to be difficult to scale. But he was of the belief, and this is a very senior chip designer at IBM, that it is still on track. It is still on schedule. If we see Dojo come out this year, would Morgan Stanley change their tune? Probably, but maybe not, because they don't necessarily get it. So I just wanted to allay the concerns that Dojo is delayed.
Lots of very good points there. So this again made me think that it's so funny because Tesla, they're assigning AI to all these other companies because they have a LLM that they've released. But actually, they're the ones who have not proven that there's a revenue stream out of this. They're charging $20 a month. People are going, oh my God, this is going to just go crazy. And it's going to be a massive business in the future. Tesla has not shown any revenue stream. And yet, like you said, they have one of the largest supercomputers in the world. They're working on their own chip. They've got FSD, which is, like you said, real world applied AI that you can see where the revenue is going to come from when it works. And you can just go down the list here. And so this is just mind-boggling that they've not assigned it yet because they don't have a revenue stream. when you step back and go, this is going to be the biggest revenue stream possible, even bigger than what the others are doing. And then the point about Dojo at the actual earnings call, he did refer to Dojo 1.5, 2, version 2, and version 3. So people are going, Dojo, it's they stopped it or whatever. No, they've been continuing to hire like crazy. They're continuing to work on it. It's just normal Elon speak. He said the same thing, that I don't think SpaceX is going to succeed. I don't think Tesla's going to succeed. I don't think, all these things are like a shot in the dark. That's just the way a startup entrepreneur thinks. But analysts misinterpret that.
I would add to that the analysts refuse to count any future value for stationary storage like megapacks until the revenue had already arrived in significant numbers. They've been churning in revenue for years before they actually started counting it. So the idea that they can predict the future when they can't accurately predict the present is a little hard to swallow.
Okay, so anyways, if we are looking at the present, we are seeing Tesla stock languishing. We have seen the Magnificent Six still continue to grow. People are moving their money away from Tesla, the money flow, to the Mag 6, specifically NVIDIA and others. So with so many institutional plays focused on AI momentum beneficiaries, right, the Mag 6, what may not be appreciated is the potential for Tesla to be not just excluded from the AI trade, but actually on the other side of the AI trade. So I don't know what he means by this, but basically, it's not this is what we just said, right? It's like, it's to be not just excluded, but so it's like right now they're not being excluded. They should be on the other side. They are the leader in this space.
Well, I'll tell you what I read from that is he's saying that people would sell Tesla to buy NVIDIA. Yes. And we have seen on social media people doing exactly that. The question today is NVIDIA's valuation today a bubble? And if it is, and that bubble bursts, where will the money go? And I think the answer is back to Tesla in some part, because especially if people are selling Tesla to buy NVIDIA, it would make sense when they see, oh, we've hit the top and we're coming back down, for them to jump back over for the better bargain, the value that is Tesla. Because there is a practical limit to how valuable a company can get, and NVIDIA is getting close to it. It can't 10x from here. Some companies can. And
I don't know. I don't know if I agree with that one. I think
really?
NVIDIA's going to continue to grow. The AI boom is just the beginning. This is massive, massive, massive. So I don't take anything away from AI, NVIDIA. I think they're going to keep growing. It's the whole idea of, is NVIDIA going to 3x, is going to 5x? I still believe that Tesla is going to 10x, 20x, and even higher x. And the reason is because of all the things we just said. Dojo's their own chip. But even if they don't do that, it's Robotaxi. It's the bot. The bot's bigger, right, in my mind, than the AI boom.
I meant more for NVIDIA, because NVIDIA is just a chip company.
Yeah, and they're not. They're not. Yeah.
Okay.
They're not just a chip company.
That is outside my area of expertise.
Yeah. They're getting into autonomous driving. They're getting into robots. They partner with 12 robots. They're doing into biotech genetics. So they're moving way beyond just a chip company. But okay,
that's great.
Let's keep talking about this. This is right up your wheel, alley. Right up your alley. I should just stop. This is about revenue growth. So the next section is no revenue growth. Investors question whether there was a possibility that Tesla may not grow volume. The fourth quarter run rate is 2 million units. And so they think that that's basically what they're targeting for the 2024. Could Tesla even show declining sequential unit growth this year? Boy, for a name where its management team was recently targeting 50% growth, the change in sentiment and growth was not lost in the group. This is, I guess, the big thing. Because no guidance, because they think that there's a demand issue. I had a big debate yesterday with people. Demand issue. And there is no demand issue. The EV growth is skyrocketing still. It's just lower than the 50%. It's notably lower in 2023. Doesn't mean there's no growth. If there was no growth,
this is ridiculous.
They would have said that. Yeah, go ahead.
This is ridiculous. It's ridiculous. The idea that that we could decline in 24. I think the problem we have is that a lot of these analysts never leave the country except when they're on vacation. And when I'm on vacation, baby, I don't work. Well, when you and I go to other countries, we're still Tesla analysts. And this is absurd. Yes, there are the EV story is busted in the US, there are a few manufacturers who are pulling back and delaying. Globally, that ain't the case. Globally, the markets recognize that there are looming ICE bans, hard deadlines they have to meet. If Toyota doesn't want to get into clean energy, that's great, but they're going to only be selling in Japan and parts of the US very soon. If they wish to opt out of the world's largest markets, let them. That's crazy to not recognize that. The idea that demand would slow from, I believe we will exceed the Q4 annualized run rate in 2024, obviously, because throw Cybertruck on top of that, right there you've already beat it. Throw any amount of increased demand on the Model Y, we've beat it. The Model 3 refresh is proving very popular. Add that on top, and we beat it. Any one of those would do the trick, but now you've got all three. So what on earth are we doing here, man? That's crazy talk.
That's good. Okay, perfect. Exactly. So now, where do the numbers bottom? So this is Morgan Stanley reminded the group that our fiscal year 24 earnings per share stands at $2 non-GAAP. And in fact, they're lower than the consensus of $3 per share. There was little to no pushback on our forecast, which we think is in line with institutional expectations. And the group said, yeah, they actually think that their earnings per share will go down. It's the stock's going to react negatively for potential further negative consensus earning revisions. And again, this is completely opposite to, this is just the view of what these guys think, that the earnings per share is going to continue to keep getting cut, when there's actually the opposite, which is continued cost of goods reductions will continue to be shown. Interest rates will be cut. Margins will get better, those kind of things. But these guys are very, very negative. What's your thoughts on that?
I don't understand how you can, with a straight face, say that you're 40% lower than the consensus on a company that you're still seeing an 80% upside in. It just leads me further to the conclusion that this is stock astrology at this point. And a lot of these analysts, I really think, just use dartboards instead of Excel spreadsheets to come up with their numbers.
Yeah. So if you take a look at what Morgan Stanley says, right, they say that despite that bearish feedback from the rest, we remain overweight with a $345 price target, which is, like I said, 80% higher than where we are today in the next 12 months. Our thesis on Tesla is that it is both an auto stock and an energy and AI robotics company. Okay, so at least these guys are saying that Tesla is an AI robotics company. Having said that, you wait till you find out that they don't actually include the robot part of it to the price target. So in fact, our valuation of the core auto business is just $75 a share, represents just 22% of our 345 price target, which they revised down from 380 in earlier this year. So they go, negative developments in the global EV market very much matter to Tesla and should reasonably have a negative near-term impact on the price of the stock. At the same time, however, we believe investors should not ignore the continued developments of Tesla's other plays, many of which are auto-related. The recurring revenue opportunity from Tesla's fleet embedded in our Tesla network services valuation. So they do believe in FSD. They do count that. That's what they're talking about here. And other areas that we do not include within our 345, but that market may include, is the bot. They still don't put that in, but the bot, they know that the others are. Learn much more about it, which I don't think that they are. I don't think anybody's putting the bot valuation in. And then, of course, they're going to learn more Tesla AI Day. Yeah.
So I love that they're counting on AI Day when Elon himself said, we may not even do an AI Day because every time we do, all of our competitors study it frame by frame and copy everything we're doing. But the idea that they could get to 345 without including, with only $78, $75 of it being automotive is pretty bizarre to me. The recurring revenue for the fleet could also be a buck per car on premium connectivity. I don't believe there's much, if any, margin in that today. It could be the supercharger fleet, but I'm not sure how they're getting to 345 without including bot or dojo or any of these things. That's very, very surprising. But again, stock astrology. I maybe their Pisces is rising with the moon. I don't know.
Okay. So the second thing these guys did was a survey, perception survey with consumers. And then the questions that they ask is two questions. What is your current overall perception of the Tesla brand? And how important is the reputation of Tesla CEO Elon Musk on your overall view of the Tesla brand? I'm not going to read all this, but basically 43% consider Musk's reputation to be important to their view of the brand. 43% of the people who interviewed or asked, and they said 43% said it was important. And then if you take a look at its EV owners, which is 53 people, by far had the highest affinity for the Tesla brand, followed by the hybrid owners. So that makes sense. So if you look at this table here on the left column, you've got importance of Musk's reputation to Tesla's brand. And then of course, the brand perception of Tesla, low is down here. So the people with the highest brand perception of Tesla, of course, are the EV owners, and the second are the hybrid owners. They have the highest brand perception for Tesla, and they also have the highest belief that Elon's reputation matters to the brand. And then, of course,
So
just standard. Yeah.
So there's two things on that. When they say how important is his reputation, that's a mixed bag, because for some people say the way he's behaving today, I do not like. But that wasn't the question. This includes people who are saying his behavior today, I do like. So we don't know which that is.
Right.
If he were to, and there are people, we've seen them on X, who say, I am a bigger fan because of his shenanigans. Great. There are a lot of opportunities here. If Elon just moderates his tone, which he may choose to do if the new comp plan is based on stock performance, that just means automatic upside, because you're not going to alienate people by not saying crazy things, and you could win some hearts and minds back. The other one is the fact that EV number is so high on the chart with having a favorable opinion of Tesla. EVs are going to keep growing. Every new EV buyer joins that dot of affinity towards Tesla, because this is a big shift that's coming. It's coming globally. It's happening even in the US. We're seeing EV market share increase year over year. So that dot is going to just keep getting bigger and bigger, because EV owners do appreciate Tesla, and hybrids are a gateway drug to EVs. I've known a lot of hybrid owners who became EV owners because they loved that first 10 miles or 15 miles when it was on pure electric, and they wanted more of that.
Yeah. Good. I mean, yeah, this is a weird survey. 20,000, 2,000 people were surveyed. But yeah, the questions are interesting. Like, yeah, it could have been a little bit more deeper dive. I'm sure they were, but this is what they showed with us. So thank you very much, Brian. That was good. We broke down what Morgan Stanley says, and they're doing their thing, right? Which is they still have a very overweight bullish sentiment on Tesla, 345. That's pretty good. They don't include the bot in there, but they do include revenue for robot FSD. They very small amount of it is the auto. So this is that's what I like about Morgan Stanley, right? They don't see Tesla as just a car company, but then when they survey the other institutional investors, they're very much, it's a car company. Everything is about expectations for revenue growth is lower. They don't give it any AI at all. And so that's where the disconnect is. And that's interesting. Okay. Thank you for helping break that down, Brian. Follow him on his YouTube channel, FutureAza. It's fantastic. A whole new brand. Thank you so much, Brian. See you soon. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.